The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
And as we continue our coverage here of the agmarket.net Farming for Profit Not Price Conference in Nashville, Tennessee, joining us now for a conversation on the livestock and dairy side, Robin Schmahl with Ag Dairy, a division of John Stewart Associates and agmarket.net. And Robin, good to see you here in Nashville. Hope you're doing well.
Doing well, yeah, and great to see you again.
Yeah, I appreciate it. It's been a while since we got to talk in person anyway. I know we've talked via video a few times. Always good to chat with you, and we got a few things to look at here. Let's start with that cattle inventory report we got at the middle of last week, end of January, technically. Looking at the numbers, I guess to me, everything looked fairly neutral. Your perspective on the cattle inventory numbers, Robin?
Yeah, the trade generally reacts to how the numbers are relative to the analyst estimates.
Mm-hmm.
And so it was fairly neutral from what they had anticipated. Looking at the bigger picture, yeah, we're down quite a bit on inventory. And with our heifer numbers, we're looking at more of a longer period of time before we can maybe see this herd start to rebuild.
Sure.
We haven't really seen the retention or the rebuilding of that at this point in time yet. That will happen at some point, but we haven't seen it now. So in the bigger picture, we are still, I'll say, very well supported.
Mm-hmm.
I'm not going to say that we're like overly bullish, because there's other things that come into play. There's the supply and there's the demand. And I always say the standpoint of, if there's one cow left in the country and nobody wants it,
mm-hmm.
the price is too high. So that's the other side of that equation. But when we're looking at the numbers, we're looking at demand. Export market, it's been a little bit mediocre lately, but box beef is starting to weaken again from what had its strength. It does look like it's a supported market, and that report does show that on the bigger picture.
There was quite a substantial revision to, I think it was last year's heifer number. I think it was like some 400,000. We were talking about this here before we went on the air. I feel like that's a big deal in terms of looking at rebuilding this herd, isn't it, Robin?
Yeah, when you're that much of a revision, which I don't understand how that can be that far off.
I didn't either. That's the other thing. I was kind of scratching my head at that one for sure.
Yeah, and I don't know if the people just didn't have enough donuts or didn't have enough to eat before they looked at that, or somebody misunderstood what somebody else said. But when you're looking at such a revision, I mean, that's huge. I mean, I've known revisions like that happening before, and it's been a huge impact in the market.
Mm-hmm.
Now, this really didn't have that quite of a substantial impact yet. But it goes back to the standpoint of, there's that much of a revision in there. It's going to prolong the potential for that market to rebuild.
Sure.
And to maybe move that pendulum back to the other side where we're a little bit more negative, or should I say more well supplied than what we are right now.
It's going to be curious, I think, to watch throughout this year with heifer retention and things of that nature. The economics, I think we could argue, are they there? Are they not there to start rebuilding the herd? There's a lot that goes into whatever we do in terms of a herd rebuild, herd expansion, isn't there, Robin?
Yeah, there's a lot there. I know that our interest rates are higher now.
Yeah.
I mean, we're looking at high prices for feeder cattle, calves. So the key there is going to be, if you're going to be buying some of these animals for down the road, you got to make sure that you can cover yourself on the other side, because a lot of things can happen. Now, with the Fed not looking that we might be where they want it to be, interest rates might not be increasing here, but then you're looking at the feed side of the equation, facility side of the equation, marketing side of the equation. And feed prices look now like they're going to be reasonable, maybe even cheaper. So that kind of takes that off the table from the concern we had before. But then the bigger thing is going to be the weather. Is El Nino going to be hanging around a little bit more? Could we see a little bit of more dryness into the plains states, the cattle country? Then that will prolong that rebuilding process as well. So yeah, there's a lot of working parts in there that we got to be careful. We just don't camp on one or two things.
Yeah. Talk to me about the dairy numbers we've seen with the cattle inventory report. And I know we just had a milk production report as well here. So we've had a lot of dairy data lately. And I know you had some thoughts about that to share with folks.
Yeah, the biannual inventory report, or the inventory report for the all cattle. We did see a decrease for January from the previous year, January, for milk cows of 41,000 head. We saw a decrease in the heifer numbers, or the replacement heifers, of 15,000 head. But we're looking at the ratio of replacements to dairy cattle almost identical as last year, which was about 43.4%. Now you have to make a comparison January to January to January, because January and July numbers are always different for some reason. But otherwise, if you're looking at the January inventory on replacement heifers, it was the lowest ratio to cow numbers since 1998.
Wow.
And that goes to the point of when we're looking at the heifer market right now, replacement market, it's tight. And heifer prices continue to go higher. I mean, we're looking at $2,800 for a replacement heifer when we got milk prices as low as they are. It's not usually that way. So these farms that are going out of business, there's a big demand for the dairy cows now, so they're not going to slaughter. So we saw a really low slaughter number on the livestock slaughter report. So one of the big things there might be the beef on dairy push.
Yes.
Which is putting less heifers available out into the market. And again, that's something that, like the whole beef market, can't change overnight. You know, nobody has a bag of heifer seed in the shed where they can put water on, and all of a sudden we have more heifers. It's a longer term process, and that could be more bullish to the dairy industry a little bit later down the road. Not saying it's going to be, but at this point in time, but that's been pretty significant as far as that inventory report is concerned. And then when we look at milk production, our milk production for the last year was almost on par with the previous year. USDA is still predicting about 4 billion pounds more this next year, but that's a monthly moving target. We have less cows, but our milk production per cow has been growing, and it's been stronger. So we keep making strides in that aspect of it, production per cow. But one thing we're seeing overall is, even with the low milk prices, farmers are wanting to produce milk, and they're not pulling back right now like we saw in 2021, where we started seeing some really heavy culling. That's not happening right now. So they want to produce milk. That's the nature of the business. We produce milk when the price goes lower. We want to get the most we can out of the cows. And when the price goes higher, we want to get the most we can out of the cows. And that's just the nature of the business. And that's not wrong.
Yeah. Because
we can't jump in and out like a manufacturing plant. It's a business, and that's what we have to do.
Very, very true. Very, very true. Robin, I know you look at the entire livestock arena as well. I'd love some thoughts on this hog market right now. Feels like hogs have maybe found a base to some degree here the last month or so. Your thoughts on what we're seeing right now in this hog market overall?
Yeah, it seems like we found a base. We've been seeing the cash market see some nice strides over the last month. We've seen, just in the last export sales report, a doubled export sales of the previous week. And that seemed to be like that's what was happening prior to the report coming out, and that's why they were so much stronger on cash. Cutouts really are just kind of drifting along at this point in time, but there's been some talk about the PRRS disease that's been having a greater impact than what's really being reported right now. So it's possible. We don't have the numbers bearing that out yet, but it's possible that we could be seeing a tightening in that hog supply. And I don't think hogs are going to continue to shoot up like cattle did, because we're not in that type of a posture. But we seem to be have found some good solid support under it right now, but that's not going to be without some market retracements. But I would venture to say that probably the worst is behind us, at least for a period of time.
How much has the collapse in Chinese hog prices had any impact in our market?
I really think that when Hong Kong or China came out and said we want to reduce our hog herd because of the African swine fever problems they have, well, the market did react somewhat at the beginning, and the anticipation is of greater export opportunity. And maybe we're starting to see that, like I said, with the weekly export sales.
Yeah.
If that continues to be strong and China's always in there as maybe one of the top 3 buyers, I think we're going to see more evidence of that.
Robin, about a minute here. Final thoughts. What should livestock folks be thinking about next 60 to 90 days here in terms of their risk management? What would you say?
Well, I think you have to take some opportunities on this movement up and to lay some floors in. And I know that it's gotten a lot of popularity lately, but this livestock risk protection insurance has really gained a lot of interest. And I think that's a really good way to try to put some floors in on your price, or if nothing else, do some option strategies, put options. I don't recommend this personally. I don't recommend doing a forward contracts because there is potential for quite a bit of upside, but doing something that allows a lot of flexibility. And so those 2 things I think are a necessity when you're buying those feeder cattle and calves at the exorbitant prices they are right now.
Robin Schmahl with Ag Dairy, agmarket.net. Always great to have a conversation with you, sir. Thanks for joining us, and we'll talk to you again real soon.
Yeah, and it's great to be here personally with you in Nashville.
Definitely. It is. Thank you for the time. Appreciate it, Robin.
Thank you.